How's it going, everyone? I want to give an update on my credit spread journey. I think you guys are going to really like it. I want to, give constant updates to give you guys confidence. And if you're looking for a strategy to make passive income where you say, I want to make, $500 a day, 1,000 a day, or even $50 a day, depending on your account size, I can give you guys the parameters of what you need, the amount of cash you need, and this is the only strategy where you can say, I'm going to make this amount of money, whether, if I win or lost, this is how much I'm going to lose. And every day you can say, that's how much I'm going to make. So I'm going to discuss the strategy. This is going to be called selling credit spreads. So you will need an option level 3, super easy to get. If you want help with that, message me in the Discord. I'd be love to help you guys out. The link's down below in the YouTube comments below. All right, so let's get into the chart. Let's get into everything that you need to know, and it's really exciting. It really is because so this is the strategy on December 20th. This was last Friday. I took the trade, and I got in this trade super duper late, and I missed my entry, and I still won. An amazing gain. I still won even, and I took the trade way up in here at 115, 130-ish time frame. So what I did is what I look for is I try to find the trend of the direction. So with the 15-minute candle, what you do is you look at the first 15-minute candle. If a candle closes above it, like this candle here, no, that didn't close above it. Oh yeah, it did. So that determines your direction of the trend. So right in here, all you have to do is just look at the top and the low of this first 15-minute candle, and all you're looking for is a body to close above it. And this is why I missed it. I didn't really quite see this. And what happens is when you close above it, you want to get in kind of early on the trend, because when you're selling credit spreads, the premium and how far out of the money you can go is going to get worse as time goes. So I waited to sell something all the way up till 130, 115 area when I could have easily got an entry right here at 1015. And why do you say I could have got that entry? Well, that entry hit this EMA 5 along with this upper orb here. So, and that's really what you want to look for. So once you get your entry, like here, you look for that retest, and then you try to get in. And as you can see, this was just a chill day from there. I used it. It just depends on what I see. I use the EMAs as entries. I love the EMA 10 the most, so that's probably what I was waiting for. Maybe hit this, come down a little more, and then that would have been your kind of the best. But with credit spreads, like I said, you don't have to get the most precise entry, and price can go terribly against you. Like, for example, I bought way up here at 593. Well, guess what? Price went to all the way to 589. I was down like $4 from my entry, but I still won because my credit spread that I took, if you saw it in the Discord, swing trade, day trade alerts, this is the credit spread I took right here. I did the 587 and 588. So price would have to go all the way down to 588, which is right here for me to lose. Price got pretty close, but it didn't quite get there, right? And that was obviously a bad entry that I did. I'll be honest. I should have waited, till the next strike, because this was overextended. And that's what I want to see. If price is hitting my upper band, I'm going to start using these counter channels appropriately. And that's what these are. This red band is a sell zone. This green band is a buy zone. So if I hit way up in here, and I never got that pullback like I wanted to, like, you could have easily missed this pullback and it just went up. I was looking for that EMA 10, which is ideal, and then the EMA 20, but it just didn't give it to us, and it just went right up. So what you could do is say, hey, price went super duper up. We're hugging this upper band here. I don't think price is going to go like way up in this area, which is where you could have did bear calls. So I could have did that and been much safer. So the purpose of this strategy and what I want to get to, it really does work. The probabilities, I have not lost all last week, and you're not going to lose a lot. If you look at the daily candle, we're going pretty so far out of the money. If you look at most of these days, they're going 0.4, 0.5, 0.7, over 1. And even if they do a massive candle, like this was the J Powell day, you wouldn't trade that day. So just remember, J Powell, you just never trade on the big economic events. But since you're trading with the trend, the direction of the trend, if a price goes up like 2 to 3%, you're going to win the trade because you're trading with the trend. And you can see a lot of the trades just don't even move much, and you win on either side of it. So that's the reason behind it is you want to make sure you're getting money every day, right? And this is the only strategy that can do it. If you buy options, you cannot guarantee yourself how much you're going to make. You don't know if you're going to make 10%, 20%, 50%, or even, 2%, or you don't even know if you're going to lose. The chance of you losing is incredibly high if you buy options. Whereas this strategy, I know as a seller, I have much better odds because you got to think of this. You're like the Geico and State Farm. You're selling the options to the buyer, knowing that if I sell a 0 DTE out of the money, the probability of that expiring worthless is extremely high. And most buyers lose when they buy 0 DTE. So it makes sense to be on the opposite side and be the casino here. So what we're going to do is I'm going to show you guys exactly the funds you need and because we've been doing this. It's been a really nice thing and all that. But if you go to the options channel, if you want to place these orders, go to vertical. It's very simple to do. You hit vertical and you're going to look to sell calls or puts. So now remember, if the 15-minute orb, which is this first candle here, and price, and we have a 15-minute with a body closing above this 945 candle, that means price is in a bullish direction. So we want to be doing bull puts, which is the term of selling puts. So we go over to options and we hit puts, and we would go straight to 0 DTE, which this is the market's close. We're not going to see it. It's on a weekend. The next expiration is on Monday, which is this 2 days out. So we'll always do 0 DTE. On Monday, this will say 0. So what we're looking for is price to be pretty far out. And look at this. This is actually crazy. So if I did bull puts, I can go all the way out here to about 6 cents is on the mid. So I could do this one and get filled for 6 cents on the mid. And that's what? This is a 581, 582. So if I did this one and I want price to keep going up, right? So this is going to go all the way down to 581, 582. This is the power of credit spreads. It's going to blow your freaking mind. 581 is literally right here. Actually, right where this line is right here. So we'll just adjust these lines here. This is 581 and this is 582 down here. So on Monday, if I bought this at the end of the close, let's just say I want to do that, price would have to shoot all the way down here into this area for you to lose. Obviously, if it does it faster during the day, let's say like on 9:30 or 10:30, like it starts getting in this area, then yes, your premium is going to go up. But if it does that during like the end of the day, like for example, price needed to move $1 for me to lose, but since it did it at the end of the day, it didn't really touch me that much. So if you look at this price range, so it would have to move down roughly 1.71%. SPY usually does not move down that much unless there's a big economic event. So you gotta look at that CPI, PPI, and all that stuff. But that's this is my reason of it. And it's like just not having any strategy alone. If you just bought these, you would have an extremely high win ratio. But using my strategy of the 15-minute orb and discussing where the trend's going to be, like today, the trend's is going to be all up. So we want to do bull puts on a pullback. But if we don't get a pullback, this is one of those rare circumstances where this 15-minute hits this upper band. Then yeah, you probably should do bear calls if you don't get the pullback till later in the day, because 130 taking these plays is kind of hard because you're not going to go as far out of the money. But whereas between 9:30 to 11, you can get some really good distance where you can go. But yeah, I just want to discuss this because I want people to feel confident. This really does work. This strategy can make you lots of money, and you can see like right here, this example, how far out you can go. And depending on how much you want to make, Webull does it really well here. If you only did 10 contracts, you are only spending $940 right here, which is your max loss. That means your max loss is $940, and then the credit you're going to get, your max profit is $60. So with fees, you can count like around $50 probably with fees. So with a $1,000 account, you're making $50 a day. And keep in mind, you're not going to lose the whole 1,000. So with the stop loss, what we're doing is 200%. So roughly, if you lose one trade, it'll take out 2 trades and like a quarter. So if you're making $50 a day and you times that by 20, if you have a perfect win rate, which is very doable with this strat, that's why I'm not saying this is not doable. I mean, you're realistically probably going to have some perfect months doing this. That's you double your count in 1 month. So let's say you take a loss. Well, that would be minus 100, and you'll have 900 for the month. Well, if you take 2 losses, you'll have 800. You see where it doesn't really bother you much unless you get like an extreme amount of losses, which if you do a lot of the back tests and you do the strategy exactly how I'm saying, you're not going to have a lot extreme amount of losses. I'm even saying this too. What I'm doing is I'm doing the 5K account on this, so I'm making roughly 300 a day with the fees, like 250. So you can see, like, if you're doing that, you're making 250 a day. Times that by 20, you're making that 5,000 back. So what I'm going to do is, if I do happen to get a loss, I'm doubling my size for the next one. So 50K account or 5K account, you're doing 50 contracts. Every 10 contracts with my strategy is $1,000. So I would do 100 contracts because with much back test, you very, 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 very rarely ever get 2 losses in a row doing this. So what happens is you can take a loss, and then that next trade that you double your size, you get it all back and then some, right? So that's what I'm planning on doing, and then I go back and retransition to using the 5K size. But if you just want to just do the regular size, then it only takes 2 wins to get back 1 loss. And the probability of this is very easy. You go on without your day. The minute you get in your trade, you just do whatever you want after that. So this is the strategy, the 15-minute orb of selling credit spreads. Any other strategy cannot tell you this is how much you're going to make. And I love it because you can pull out the calculator. You can say, okay, I'm a seller of options. This is how much I can make in the month. With a $1,000 account, I should be making $50 a day, doing way out of the money. I'm not even doing high premium. I'm doing 6 cents. You can make more if you want to go closer into the money. So like, for example, if I look at SPY, I can look at, all these things that are highlighted are in the money. I'm going way up in here and doing the 6 cents, which is way up here where you can see where the mid is at 6, and that's where I'm going to sell. So if you have questions on doing the order, just make sure that the main thing you're seeing is you're getting a credit. If it says debit, you're a buyer of options. So make sure you hit the side where it says sell. And you're always going to buy one leg and sell one leg. So it's okay to see a leg that's being bought. That's insurance. That's to make sure you don't, take an extreme amount of loss, right? That's to protect you. But the max loss will say if you didn't have a stop loss is going to be that 940. But remember, your stop loss is 200%. And how do you calculate that? Take 6 times and double it times 2. So 6 to 12 is 100%. 12 to 18 is your 200% stop loss. So if this gets to 18 cents, then you should be out of the trade. And you don't have to manually do it. All you have to do is once you put your order in, is hit close selected position, hit stop order, and put 18 cents. And that's all you have to do. And then you go out through a day, and if you lose, it does not matter. I'm telling you. You're not going to lose a lot. I'm going to double my size, and you can look at plenty of this 15-minute order strategies. We played it right here last week. It didn't matter what you did. Bear calls or bull puts, you won this day. But as you can see, here's your orb at 945. You get your downtrend candle here, which is clearly below this 945. It comes back up to the 510 and the 20. All here is your entry. It goes back down and then comes back up here. But you don't really feel the pain. When you do these, I'm telling you, you don't really feel the pain here because this was your theta kicking in. You got to understand, theta works for you. So if you get this big down move, the buyers get wrecked just on here and then they come back up. It's not as high as it should be. Like right in here, you're probably down 50%. 200% will be way up in here you have to go to. And so you can see right here, this EMA 50 is going to act as resistance, and every time it hits it, it goes down, and you can see the rest of the day you go down. So the beauty thing about selling options is you don't have to do what the buyers have to do. They have to predict price and time, which is extremely hard. They got to predict it's going to go up at this amount at this certain time, and then it's going to go to this price. Whereas sellers, you could say, well, I don't think it's going to go way up to 606, or I don't think it's going to go all the way down to 580. And that's what you're doing. And could it go all throughout this area? Yeah, and you win if it's choppy, it goes sideways. You win if it goes slightly up, or the direction you do it. If it's bear calls and it just goes straight down, well, it's just an easy day because you are doing bear calls and you're selling calls and you want price to go down. But the beauty thing about this, like I said, is I bought this last Friday way up in here. Pretty much almost at the top I sold this thing. I got pretty close halfway between the 5 and the 10. And yeah, it went against me some down in this area. And I was like break even all throughout here. And then it went against me. I was like 100% loss right here, went to like 10, 11 cents. But then it was just perfect because at the end of the day, theta kicked in and the premium just shot down, you know, because I mean, the closer you get to at the end of the day, the theta really picks up, and that's really what you're going for. So you got to think of like Geico and State Farm is, hey, here's, you know, let them pay you the premiums. Sure, if they get in a car wreck, you pay, you know, you pay it out, but the majority of the sample trades, what you're doing here is over time, you're going to keep winning and winning. And that's the long-term approach you want to think. So a lot of people are like, I don't have a lot of money. Well, try this strategy. I don't care if you have $500. $500, you're looking at, if you do this strategy, you'd be looking at 5 contracts, right? 1,000 is 10. So if you do 5 contracts, I mean, it might not seem a lot in the beginning, but this will add up. Remember, thousands, you're going to make roughly $50 a day, right? So this one you're going to make, you know, kind of half of that. It says 30 with the fees, about $25 a day. So I mean, like I said, every account size, though, you're pretty much doubling it. It's 25 times 20, you're making that 500, and then once you get the 1,000, then you can go more size. Then you're up to 10 contracts. So you keep doing that 500. Once you go up to that end of the month, then you can go into a heavier size of 10 contracts, right? And then after that month, you go into 20 contracts because you'll have $2,000. And you see how it gets bigger and bigger and the snowball goes. And this 20 contracts is now making you $120 a day. I mean, you can see how this really adds up, right? And then for the big wigs, you're going to make tons and tons. You know, let's say you do 20 grand. You're looking at 200 contracts, right? Well, you're making $1,200 with that 20 grand. So do the math with the fees and everything. Let's just say you're making 1,100 times that by 20. You're making 22,000 a month. Obviously, there's going to be more fees in that one. It might be 1,000 a day because that's a lot of contracts you got to pay for fees and commissions. But you get the point where, and that's not even an extreme amount of money. So a lot of people will be putting $20,000, $10,000, $5,000, or even their whole account onto buying an option when you're playing a losing game. Sure, you might go up some, and the reason why I like this is you're never at the point where, dang, I should have held on. Dang, I should have did this. I should have did that. I should have, you know, you're never doing that because as a seller of option, you're not being greedy. You're like, the max profit I can get is 6 cents on this premium that I want to do. That's the premium I want, and I'm going to let it expire worthless. My max loss is 200%. That's a percentage that I don't want to lose more. And so it's not like, oh, it just kept going up, I should have just held my calls, because you don't ever have that FOMO or fear of missing out. You just do the system, you collect your 6 cents for this day, and you move on, right? And that's the beauty thing about it, because you don't have to keep watching it, and you don't get that weird irritating that I missed out on so much more money. Whereas a seller, you don't care about that because you're just trying to be a conservative and be a boring player. And that's how you stay in the game longer. So I hope you guys enjoyed this video. Let me know what you think about it. I'm going over this. I know it's a longer video. I just want to go over my journey. 1, how do you do the trade? Do the 15-minute orb strategy. Look for it to go up or down. If the price goes up like this, where it's above this 945, you do bull puts. If it goes below the 945, you do bear calls. And that just means I'm selling the puts or I'm selling the calls, if it's bear calls. And it just makes it easier to remember. And you're always going to look for the 0 on here. So obviously it's the weekend. It's going to say 2. But you look for 0 DTE, and you go all the way out of the money where price is close to 6 cents. You sell that option, and then you go throughout the day. Your entries are going to be, depending how big the trend is. Like, this is a really big trend. So I took it on the 10, but a lot of times it's not bad to take it on this 5, right? It just really depends. You want to get in as early as possible if the trade presents, because if you go way out here where I did, you can't get as far out, right? So do keep that in mind. They're not just going to let you say, oh, it's like 1 o'clock in the day. You can get it way out in here. There's not going to be any premium. So yeah, right at this moment in time, if you buy it right at the bell, yeah, you could probably go way out here and say the price isn't going to go way down here, but you're also guessing. So you got to have a trend confirmed. I should have got in like right in here. You can see how sometimes it goes pretty fast, but not all the time it does that. So you can easily hit this 10 and then choose that direction. You can definitely see the EMA 50 crossed over here. It's definitely a very bullish trend. So I hope you guys enjoyed this video. If you guys want to join the premium Discord, learn more, see exactly when I alert, exactly the format it should look like, I'll do the screenshots. I'll let you guys know when I get in. You can follow my journey. You can paper trade, whatever you want to do. I tell you exactly when I was getting in on this day. I circled the EMA 10. This is the area I want to get. I said expect to bounce there. The exact order I got in, I did 50 contracts. And I did the 587 by 588, and I did bull puts. These, what you see is you can see the minus 50 on the puts, and then you're gonna have to buy it. So you remember that buy sign, that plus is your buy, and you always will have one leg that wins and one leg that loses. You want the leg that wins to be higher than the losing leg. And it turns out to be like this. When the premium expired worthless, we won the day. And you can see the P&L open is $300. So that's how it works. It's very simple to do. It's just getting your mindset to change from buying to be a seller. If you want to be a long-term player in the game, if you want to make consistent returns, this is the only strategy I can recommend. Yes, it's very boring, but you will have win ratios way over 90%. I'm looking at over 95% for each month. So that's the strategy. The beauty thing about it is you don't have to have massive amounts of money. Like I said, just try $500. Double that, see how the first month goes, see where you're at. If you're at 1,000, then you can keep on going up. So I hope you guys liked this video. Hope you guys enjoyed it. I appreciate you guys watching this. If you guys want to join the Discord, hit the link down below in the YouTube comments below. It'll say join the premium Discord for my alerts and system. It'll take you to this free chat landing page. If you want to become a member, and be alerted to everything with the education, just hit day trade alerts here, which I showed you, and it will ask you to subscribe, and it's not going to cost you a lot. It's not outrageous. It's literally cheaper than a Happy Meal. It's $12 a month. You get, and then not only do you get day trades, you get swing trades too. So you can look at the server shop here. It's Day and Swing Trading Plus. You have a naming gold. You have live streams. You have updated education videos, updated strategies that I do that I find that goes with the market environment. For $12 a month, it's by far the best deal, and this is a strategy that you will not find on the internet. I've taken lots of strategies together, and I'm thinking if I don't want to hold overnight, I want to sleep good at night, so it's got to be 0 DTE. Selling is going to be the best opportunity to make the most or make the most consistent, which is what we want to do. We want to be like Geico. We don't want to be playing slot machines, and so this is the best strategy to do. So $12 a month. If that's too much, well, you can do just swing trades if you want to see those for $6 a month. Hope you guys like this video. Give a like, subscribe, and comment. I'll see you in the next one.